I would say that the markets that are most in vogue with clients have been the same for the last number of years. It's still the core Western European markets, Germany, France, and to a much greater degree over the last number of years, Spain and Italy. Those core developed markets, including the Netherlands, the Benelux, etc., they have been the hottest property markets over the last number of years. There's been very little interest we see in the Eastern European markets.
Why do you think that?
Well, I think that the interest that has been there has come from specific markets. So you've seen a lot of South African investors or Israeli investors go into those markets. But I think after the crisis, there was very limited liquidity in those markets, and so there was institutional investors got burnt in the crisis in those markets, and now they're focusing very much on the core developed Western European markets. And even within that, they're focusing on the larger cities. So there's less interest in secondary and tertiary cities in some of these big markets.
They're also less stable from an economic and political point of view.
Yeah, they've probably seen less growth through that cycle. So there's been some nervousness there.
How has Brexit and all the uncertainties around it affected the European real estate market?
Well, it's had a big impact in the UK market for obvious reasons. I would say that on the back of the fact that international investors have stayed on the sidelines from investing in the UK, that has benefited a lot of the other European markets, because international investors, particularly those from the US and Asia, would look at the European markets as one market. So if they're nervous about investing in the UK, they'll just reweight that to France or Germany or other markets. I would say that the European investors have largely stayed out of the UK market as well. There's also a currency hedging cost to investing in the UK, and that has meant the hedging cost has gone up over the last number of years.
How about political risks? So there's been a lot of political turmoil in Europe
Yeah.
the past few years. To what extent are these risks influencing your business decisions?
I would say that the vast majority of the money that's being invested in Europe is coming from European investors, and I think that they probably perceive the political risk differently to an international investor, and I'd say they take it into account, but it's not dramatically affecting the amount of capital they're putting to work, particularly in the bigger, more developed markets like Germany, France, Italy. It may have had a much bigger impact on investment in Greece or some smaller markets like that, but it hasn't had any major impact on the developed markets.
Everyone's talking about the next downturn and how it will be, what will trigger it.
Yeah.
How are you adjusting? How are you preparing? Because everyone says it will eventually come at some point.
Yeah, well, we hope it's not going to be as devastating as the last downturn. I think that there's a lot less debt in the system, so we finance a lot of our investments either entirely with equity, or where we do use leverage, we think that the leverage is at a modest level. We see the same happening with most other investors in Europe as well, because it's very hard to get the increased levels of financing that were available before the last crisis. There's significantly less speculative development in the market as well, so the triggers to the crisis in the real estate markets the last time are not necessarily there. There may be new triggers that we're not so aware of, but I think investors today are a lot more cautious than they were previously.
Which sectors are currently most attractive to investors and why?
I think the mantra of beds and sheds still applies this year as it did last year. I think the largest investors are looking for residential product and logistics. Even though we've seen a significant decrease in the yields associated with those two asset classes, there's still a lot of interest in those markets.
What opportunities of growth do you see in Europe? And in which markets, in which countries?
I think where we've seen investor appetite increasing is in some of the alternative asset classes. the student accommodation, medical offices, healthcare, senior living, self-storage, data centers, all of these non-traditional sectors. So everything that's not office, retail, residential, logistics. There's been a significant increase in the appetite from investors for that. The difficulty and the challenge is getting that in scale. So there are opportunities there, but it's to find scale opportunities that is the difficulty with those asset classes. But I think investors have become a lot more comfortable with them. There's a premium to the more traditional sectors, and I think there's strong interest in that.
How do you feel about next year? What should we expect?
I think we can see maybe a continuation of interest. I mean, the investors have been, in terms of their real estate allocations, they have not been going down. If anything, they've been going up. Their allocations to private market assets, infrastructure, real estate, private equity have only been going up over the last number of years. We expect that to continue. They can get increased levels of yield and more stable, what they perceive as more stable asset classes than they can in, say, their fixed income portfolio or their equity portfolio. So I think allocations to real assets will continue to grow. And so real estate will be a big beneficiary of that.